going to move on straight to the next presentation. This presentation is by our platinum sponsors, GRIT. It's a presentation on the investment in Africa for sustainable total investment returns. This will be presented by Jaco van Zyl, the head of treasury at GRIT. Jaco, please come up. Thank you.
Hello. Good evening, good afternoon, everybody. I'm Jaco van Zyl, the head of treasury of GRIT, and I'm going to take you through the investments in Africa for sustainable investment return, total return. I believe that our, sorry, where does this thing click over to the next slide? I believe that what we actually stand for in our strategy has been proven to date over the last 5 years, actually speaks to this very title, and just to highlight the strategy that GRIT actually follows, being obviously tenant-led, that we made very clear in the earlier sort of talks that Adam made this morning, multi-jurisdictions, multi-tenanted, and also asset managing these assets in our portfolio. I think the first demonstration, just to date, is that we've managed to acquire 25 assets over the last 5 years, representing over 7 countries, over about 6 asset classes. But the main thing to take note is the occupancy levels that's maintained at a very high level, as well as our hard currency rental collections at 95%, which we feel is key, especially in Africa, to be sustainable for investments. Also obviously key for sustainable investments, which we take very seriously, is the pillars for the transformation, skills development, skills transfer, knowledge transfer, as well as the getting involved into social economic projects. Employment equity is something we take very seriously. One thing we also did in the last year, or in the last 18 months, was listed on a third exchange in the UK, which gives investors the ability to either move stock across from the various exchanges, give them some maneuverability in terms of exit and liquidity. In doing so, obviously the corporate governance that comes along with it is something that GRIT needs to adhere to as well. The evolution of the GRIT strategy, just talking about, obviously the initial strategy is property acquisitions, completed products, where we recently put out an announcement in the market to actually take on 20% of our gross asset value in terms of development risk. One thing to point out is actually not direct risk. We actually, through key partnerships and strong commercial contracts, we actually transfer this risk to third parties, which we're quite excited about. I think this will add to our NAV growth going forward. And this will come in the form of our investment in Gateway Delta, which we partnered up, as well as the pre-funding of developments, where we would start earning returns from day one. The asset management initiative, we currently have fantastic opportunities to actually co-invest into large assets, but also take over the full management function of these assets. I think in due course, you'll see us actually reporting into 2 revenue lines. One, the existing rental revenue, as you can see, that we currently report on, but also an actual asset management fee, which we will start focusing on going forward. Just to basically lay it all out in terms of how we approach and what we value in terms of our strategy. Obviously, a talented team is quite key. In these jurisdictions across the African continent, it's quite key to have the experience, not only in the property sector or the finance, but especially in the African experience. Each African country comes with their own set of regulations, bank regulations, moving of money, and that's actually quite key to be successful in the African continent. Obviously, quality portfolio. We pride ourselves on some quality acquisitions through the last couple of years. We tend to try and have effective acquisitions to try and buy it below the market price, with the ability to potentially increase our rental through those acquisitions, potentially bulk, as we can develop into stronger assets that will also contribute to the increase of yields. Relationships, I think Bronwyn mentions that quite often about the counterparties, but also relationships in Africa. It's probably the key thing out of this whole slide that I want to get across because, you know, again, if you want to run into Africa on your own, you're probably going to find yourself alone in the near future. So it's quite key to have these relationships, being it your development partners, your banks, your shareholders, as well as your tenants. So again, you know, to just express that we tenant-led and, you know, we try to be the solution for these tenants across the African continent. Obviously, being in 7 countries after 25 acquisitions, opened the door for quite a large stream of deals coming our way, which we obviously need to screen very vigorously and be careful about the actual acquisitions we take on. But as a bare minimum, we have certain risk mitigants we believe is key before you jump into an acquisition. The ability to actually earn hard currency is absolute to Grit's strategy. The ability to repatriate funds, as we all know, you can't, you know, it's one thing to have fantastic buildings, earning fantastic rentals, but at the end of the day, your shareholders need the dividends. Also, obviously, the macros of the countries, the counterparties involved, and also the ability to raise debt. Not necessarily in the country itself, also the ability to raise debt offshore, but the ability to actually push it into that country to take leverage of the yield growth there. Okay, so there's a couple of sort of initiatives that I'm going to do a few case studies on. So again, you know, I touched on the effective acquisitions where we try to buy the assets below a market value, also with potential sort of development upside. The second category we're going to touch on is the maximization of the returns in the equity structures. You know, we touched on this morning, trying to involve the pension funds to co-own these structures at a capped sort of yield that will basically boost your yields, your shareholders. Again, you know, being in Africa, the one thing is obviously constant is change. So you need to be able to adjust to these challenges, except where there's necessarily not the asset didn't come to fruition as initially planned, to accept it, and obviously putting a sort of action plan in place to turn it around. So I think speaking to the first point of effective acquisitions, I think this is one of the assets that I'm actually most excited about. We recently concluded the acquisition of Acacia Estates in Maputo. That's a corporate accommodation housing the American Embassy and Anadarko Oil. It's a far superior asset in its offering in the vicinity. It's actually no comparable asset to it. There's 3 international schools in the vicinity with a private medical hospital across the road. We bought this asset at about 8%, and it's currently valued at about 7.25. So it's a clear example of value creation with effective acquisitions. The next two assets probably are flagships in Maputo. It's the Commodity House Phase 1 and 2, currently tenanted by Anadarko and Exxon predominantly. It's one of our first assets that we acquired, Commodity House Phase 1. Again, I think this sort of leads into the first sort of case study I wanted to share with you guys. It's one of our first acquisitions, 2014, where we bought this asset at a 10% yield with the ability to have a development opportunity into a second building. It was tenanted with Anadarko with a 15-year lease in dollars, escalating at US PPI plus 2.5%. Since then, we've also added onto that some asset management initiatives where we've actually relocated some of the tenancies to actually make room for ExxonMobil. Very proud to sort of add them to our tenancy profile. They also have now first right of refusal of all office space between building 1 and 2. The construction of the second phase building was then done, completed on budget, and it's fully tenanted by ExxonMobil and Barclays House. So between these two assets and the ability to refinancing again, basically just to illustrate the sort of yield profile that we got out of that, and also to mention it's not the value creation, it's a pure cash yield pre-tax on these two buildings from a base acquisition of 10% with your normal standard, the gearing, boosted it up to 13%. Adding the development of the second building with additional gearing on that gets us to about sort of just north of 17%. And then the latest refinancing initiative that gets us to just north of 18% on the property level. The second case study that I want to share with you, again, it's like adapting our sort of strategy somewhat to the actual peculiarities of the particular asset itself. Placed towards our initial sort of opportunity we saw in the hospitality market in Mauritius. Hospitality, I think, contributes to about 30% odd of the GDP of Mauritius. And with the sort of support of the government putting a moratorium in place on the build of hotels that basically improved the rebound post-economic crisis because of there were no oversupply in bed nights. They further then, through Air Mauritius, partnered up with Emirates, adding, I think it was 3 A380s to increase the network to more global base other than the sort of usual European and South African attractions. So just looking at what we've gone on this particular acquisition, we've approached the pension fund to co-own this asset with us at a capped pref structure at 6.25%. The gearing was quite cheap in euro terms at a bank of State Bank of Mauritius. So we were able to gear this asset about 40%, add the pref structure onto it that enabled us to boost the initial acquisition yield from 8 to 11.6 to eventually 22 on the property level. On top of this, there's also a development opportunity which we will fully debt fund, which will then boost these yields further by approximately about 3%. Looking at Grit where we are now, over the past year we've done acquisitions. We've just spoken about Acacia Estates. We've also introduced 2 office buildings in Ghana to our portfolio, which is trading well. We see further expansion in the corporate accommodation, and we'll touch on that a bit later. Just to take a snapshot of where we are now. If you can see our geographical split at this stage with our sectoral split, I'll show where Grit sees the value going forward and where we see the growth, and partnering with these tenants that we allude to. Again, pointing out the hard currency returns at 95% with a strong WALE of north of six years. Obviously, the focus being tenants, and there you can see that 65% of our revenues made up of 15 of our core tenants, all of them global corporates or Forbes 2000 tenants. You can see the hospitality tenants obviously in the upper sort of percentile. Again, one of the things I want to point out, in our view, to be successful is really to asset management these assets and secure these leases up front. Again, proud to bring on ExxonMobil to our tenant profile, which we just signed for 5 years. Vale, again, it's where we see the expansion signed for 5 years. They've also approached us to further develop additional units that's up in Tet to house their sort of senior managers. And Anadarko signed additional 2,000 square meters for another 10 years. So that's, again, just points out the sort of sustainable hard currencies that we can expect from these guys. Obviously, this now post of sort of oil and gas boom in Mozambique. The button. Then it brings us to one of the other the ones where the assets not necessarily perform as expected. So we had to come to a realization, change tact, and we actually had to really sweat ourselves. We plowed $25 million into this project, partnered with Gateway Delta, and we turned this around. It's a clear illustration of the depth of the asset management team, where we really had to reposition the asset from a sort of your normal shopping experience to a really family shopping experience. Also proud to say that Alpha 55, with a long-standing track record in the market, trading for over 47 years, came in, and I think we launched the opening about 2-3 weeks ago. Since then, the footfall significantly increased, and we actually foresee some significant value uptick. It's currently valued just short of 9%, and I think we're looking towards the sort of 8 mark coming into the new year after the track record's been proved. Looking at Grit and where we see ourselves going in the foreseeable year, as you know, Bronwyn, Greg, and Leon is running around the UK collecting the checks. So as they come back, that's probably where we will see ourselves spending the money in the foreseeable future. Industrial, that's more focused on sort of the Eastern African region, increasing from 4 to 8%. That's considering obviously the natural dilution across by increasing the rest of the portfolio. Office goes down slightly, but that's also after introducing some more office space in the Ghana region. Corporate accommodation, even though it remains flat, we are expanding in there. Again, it's just a natural dilution coming from, as a result of the rest of the acquisitions. One thing that clearly stands out, actually the two of them, is the bullishness on the hospitality sector. We see significant growth and the ability to really structure these deals to enhance our portfolio. We're partnering with these tenants to the likes of Lux, Beachcomber, and Club Med, where their view on Africa is very long term. So we're very keen to partner with these guys going forward into the sort of Mauritius, Seychelles, Maldives regions. We already published or announced that we're moving into the Club Med in Senegal. And so that's obviously a big focus point for our acquisitions going forward. Retail's coming down nicely. That's just as a result of we don't foresee ourselves going into retail any further where we are. Currently, we're quite comfortable with our retail exposure in the sort of convenience shopping space. One new category onto our sort of asset class pool is a specialized, and that's basically the healthcare sector, which will be our first in that asset class, and that will be in Mauritius. I think that's all from me for now. I'm going to play a short video of our Anfa place just to illustrate the sort of initiatives we took and to showcase our asset.